Hello and welcome to the Friday wrap up presented by the Gockstein News Network. I am your host, Landy, and today is November 28th, 2025. And we're looking at Bitcoin, of course, here on the daily to start. But we do have a weekly and a monthly close coming in over the weekend. So there was no trading yesterday on Thanksgiving in the United States even. And there was a shorter day, trading day today for Wall Street, and we still do have CME open. They took a short close and a little break, and then have been back on the charts. So, look, Bitcoin bounced right up to one of the areas that we spoke of. Right, I was talking about any kind of closes above the inflection point here at $89,000. I'd be looking up to the top side of the weekly, somewhere around 92, which is some dailies over here. We have some daily traffic over here from the lows to the weekly overhead here at 93.5. Took a little bit of a swipe at it. When looking at a Bollinger Band set here, we have the basis that it did tap on or come close to tapping on. Now the basis did move down, so it didn't quite hit it. The basis band was right around that 93.5 at the weekly. If we do see it trade above there, well, pretty easy area of overhead resistance to be looking to would be the next big weekly by the upper first standard deviation at $98,000. And again, this weekly zone is very, very important. If Bitcoin does test it, be aware of rejections around it. Obviously, we have the daily lows over here, but this is a weekly low and a daily low side structure between 98 and 101. What I would say is we need to see closes above 101, not only on the daily, but the weekly. Now, I talked about the setup. And that setup is, of course, no matter where this goes, how high it goes, it's very, very highly unlikely, but not totally out of the question that it's going to go up and trend break above 107.5 up here. This weekly stuck inside of a much wider weekly zone between 102.5 and 112. So big thing here is to look out for wherever the next lower high is, which is more probable, whether it's here or whether it's up further, wherever it comes in, and then look for a possible trend reversal setup, a trend reversal setup on higher low equal low structure as it relates to this low over here, and even all the way down to the swing would be acceptable, even if it does close on a lower low, but puts in a higher low swing than $80,000. Otherwise, back below 89, we're looking to 86, lower first. We start closing below there. Be aware of the bottom side structure here around $85,000. Anywhere below there, and realistically, can it save itself around, the monthly that we've talked about at 82.5 to the, 82 region? Sure. But realistically, anywhere below 85, the weekly down here at $80,000 by the lower second is back on deck. So just be aware of that. We basically got, volatility expansion to the downside and then mean reverted right back into fill out the weekly here by the basis band. So be very aware of closes below 86. And honestly, even below 89, I have that alerted. I do have that alerted, I should say, but I would have that alerted if you don't. And then watch it and alert 86, because if it does drop that, 85's up next. Anywhere below there, we're probably looking down to 80K again. Not that it can't put in a higher, lower, equal, low structure there, but that's kind of the zone of interest, right? And what bulls are looking for here is very, very simple, right? The bulls are looking for a trend reversal setup. So let's just, for example's sake, say that this is the next lower high area, that it comes down here and puts in a higher low and then goes up and trend breaks, right? That's what the bulls are looking for. It doesn't have to look like this. I'm just playing around with lines here. This is just an example. Please do not take this as this is what's going to happen. But let's just say that the lower high comes in here. We're looking for higher low, equal low setup on a closing basis and a swing. So if we get a close below the previous close, a lower low close, right? But a higher low swing, that's a valid trend reversal setup in this case. And we'd be looking for the trend break. We would want to see, of course, higher low closes from there, not just swing higher lows in the swing trend. Now, that's where we could also, what would be acceptable, by the way, is a dip down here on a swing, but no close below the swing low at $80,000. That would be a, sweeping the lows and then coming back up if it closed anywhere inside of this swing low. That would be a valid reversal setup. And then, of course, higher low, equal low closes are probably the most preferred for the bulls, closer to the trend break if this were going to be the high. And then get the trend reversal setup, trend break, which is the confirmation of a trend change. And then, of course, getting above, in this case, anywhere above 93.5. Yes, look to around 96, the POC, but realistically, the next weekly is the big one to pay attention to at 98 to 101. So that is kind of the lay of the land here for Bitcoin. This is still a powerful downtrend. So it's either going to be something like what I'm talking about here for the bulls to look for, or it's going to be something like this, which is, just lower lows, right? Or continuation. And I do believe, as we are starting to see the bottom side curl up here, this, if it does start dropping 85 and heading down towards the monthly at 82.5, pay attention to the lower second. We could see higher low, equal low structure around there because it's expansion into a little bit of compression on this mean reversion. So just pay very close attention to it. Continuation, of course, would be below $80,000. We'd be looking to 78 right here in this weekly, and then anywhere below there, pretty much down to that swing low on the monthly, on the daily, and that is and the weekly there at 74.4, or in this case on spot 74.4 2069. I'm going to say it every time, and of course I can also rhyme, but anywhere in there is fair game below 78. If it drops it, we're looking probably to the low $69,000 region, around that prior all-time high, all the way down to 65. But not really worth speculating on that just yet. Now, we do, of course, have the weekend candle open. So the Saturday candle is open. And, we're going to be, watching this over the weekend pretty carefully, I would say, as it comes into the weekly close, because it is also the monthly close on Sunday. So for those of you paying attention to kind of what the timing is going to be, it's 0 UTC. So it's going to be 7 p.m. Eastern, 4 p.m. Pacific. And for those of you in the United States, that's what you got to pay attention to coming into the Sunday close. Of course, this is confirmed expansion to the downside on the weekly, and it is below the lower second standard deviation. So really right now on the daily, I'd say above 92. It's preferred for, kind of hanging out or closing above that that lower second standard deviation. But realistically, if it hangs here and hangs green, you'll see the lower second standard deviation get below the close on this expansion. And it's about paying attention to that lower first, right around the weekly here by 101 from an expansion standpoint. Don't confuse this with the levels I'm talking about. We got to see progress on the dailies to even go test this area, but this is full on expansion to the downside. Realistically, yeah, you'd want to see it closing above 86. That's going to remain the same as last week. Close above 86 gives price a better shot at this previous higher low. But realistically, you got to get above 93.5, which is this higher low, close over here. And then go and test 98 to that 101. So we were just talking about that. That is also where the current lower first standard deviation is. Now, we will continue to see expansion here on the weekly, even if this closes green. So, well, I would say you want to see it above $91,800, $92,000 by the Sunday close. It's going to be, as long as it's hanging out here, it gives itself a chance coming into next week. But what I would pay attention to in time frames lower than the weekly, real quick, is the 5-day, which is in full expansion. but has closed back above the lower second standard deviation. This is going to be closing on Monday. So actually, is that Monday? It's going to be Saturday candle's open. So Sunday, Monday. Yeah, it'll be closing at the end of Monday with the Monday candle. You can see that 97.5. If this starts pushing up towards this area, it's going to be lower first. It's going to be around $98,000 before the close of the 5-day candle. Not too much happening here, realistically. I mean, there is the chance for some very long-term hidden bullish divergence, but not really that relevant off the actual 79,500 low here, which is a little bit different than the weekly, which is at 82.5. So if we look at the weekly, this close is at 82.5, and I'm sorry, this one's at 78. This one's at 80. What am I talking about? 82.5 is the monthly. My bad. Monthly is at 82.5. Weekly is at 80 and 78 respectively. And then the 5-day is kind of splitting the difference there. Because we already saw like this area here at 82.5 to 79.5. We just didn't quite hit that close open there for the 5-day. Not as relevant, but I would pay attention to it. Sorry, it's been a long week, and then of course holidays and stuff, so I'm exhausted. Yeah, 87,580 is going to be the number to beat to turn Stoke back to the upside for momentum. Got a tap on the bearish control zone, so we're looking at maybe a little bit more of a sustained bounce, even if the daily does try to sweep the low. It's probably going to turn into a more sustained bounce. Just a matter of where does it reject, or if this is going to be the rejective area. But from these time frames, like the 4-day, 84,650 or so, and this just opened, so this is turned up. Not anything to be excited about, but 95,000 is right around the pivot there. Let's see, 3-day is turned up 82.5. So yeah, I would say back below 80, just pay attention down to the monthly at 82.5. So so back below 86, and especially $85,000, which is the daily level. Pay attention to the monthly at 82.5 on the way down to potentially 80. And I'd be hunting trend reversal setups, and I'd be looking for the daily, not trying to front run. Unless you're just positioning for that and you have the right signals. But 2 days pointed up for momentum, nothing doing on divergences here. So this is very, very highly likely going to go. And that's an ugly 2-day as well. So inverted hammer, very, very highly likely going to come back down, even if it does try to push a little bit further on the daily here. Same kind of candle, of course, on the daily here. Inverted hammer, kind of a spinning top. Just watch it over the weekend. It's tough over the weekends. It's tough to kind of predict what's going to happen in terms of flows and how much volume is being put on. And, in lower liquidity environments, sometimes larger players like to step in on either side, whether it be on the bid side or the ask side. So just pay very close attention to it as I kick the crap out of my desk. And we'll kind of come back to it on Monday. That's really all I got for you. There's not much that has changed. It's playing in the range, that 86 to 93.5 range that we've talked about before. This is really just going to be about where things kind of come in for the weekend coming into the weekly. And just pay very close attention to that 93.5 to the top side. Above there, again, I'll say it again, right around these candles, which is around $96,000 to 98, is going to be the bottom side of this weekly. Of course, right around these candles at 96 is right where we have the point of control for the range in terms of volume, most traded volume, up to 98, which is the upper first currently on the daily. And then we need to see closes above if it does get into that weekly there, the daily weekly. We need to see closes above 101, but that would be the next big area of interest that you do need to watch out. Otherwise, if it rejects here and comes back down, watch 89 to 86, and then 86 and even down to 85 is fair game on swings. Any closes below 85, look to the monthly at 82.5 down to 80. and then take it one step at a time down to 78. And then after that, that's when we can look mid 70s down to that 74, 420, 69. Now, monthly is going to close, and this is what I'm going to wrap with. Monthly is ugly, and it's going to put in a high, and it's very close to the last higher low, right? So understand that structurally, this looks like it wants to roll over. Does that mean that it is going to roll over? It's like inevitable that it rolls over. No, not necessarily, but it's very highly likely. So be aware of lower term time frame bounces, meaning all of the ones that I just referenced that fail, right? And where it fails. Because while I pointed out earlier this week, the monthly's right around the basis band. I would like to see it close above. Bulls would like to see it close above. And if I'm a bull, I want to see it close above, right? So that's going to be right around 87.5, 88,000. So it's inside of the weekly area that price is trading in. So by Sunday, you want to see it closing above there. And this is going to probably flatten out. We're going to probably get a little bit of move up in the lower first standard deviation, probably somewhere around $69,000 to $70,000, as the bands are starting to roll over to set up for a wider range. And, if the bulls can save themselves here, dipping into this monthly and then trying to come back up, they still can run the highs and potentially higher. Even closing below still saves a deviation play. Kind of one of these, essentially a deviation and then back up. So just understand that we're still in the time frame Q4 to Q1 for cycle top. It's either already in or we're likely going to see it come in if we get a nice strong bounce that runs the highs. If we get expansion, though, that's when we can entertain, expansion above 126, especially on monthly closes. That's where things change, right? Otherwise, we're probably looking at, continuation down, and then some sort of bounce to lower highs and then down further into a bear market, whatever that looks like, right? But structurally, it's still a bull market, but it is right on the razor's edge. But what I'm holding out hope for the bulls is that, hey, you can get a deviation or pick up off the floor here after running the monthly low on a close, and not the actual swing for a swing break. Then try to run for the top side. That would be the best outcome for the bulls from here. But they would very quickly need to get above and close above to get expansion on the monthly. Otherwise, this is going to chop around, likely go into a bear period and start working its way down. And yes, there's a lot of supports here. Obviously, the support that we found on the monthly here, right around the highs here, and then there's the highs over here as well. But we have to see things play out. So for those, while the door remains open, especially from the miner side, hash price, by the way, I want to update this real quick here. So hash price difficulty is back to the 10th. My brain was scrambled. Obviously, I had a lot of family over. I've already called out that the next epoch is the 10th. Every 2016 blocks it takes about, give or take, 2 weeks, sometimes a little less, sometimes a little more. The estimated difficulty for mining adjustments is not, it's not going to be accurate until we start getting closer and closer to that actual epoch. So there's a lot of time to go. I wouldn't be taking this. This is from Luxor, their hash rate index. I wouldn't be taking this as like the gold standard, but it will tighten up as we get closer. Looking at a positive adjustment because Bitcoin saw quite a bit of hash rate come back on board while it's been in the weeklies here above 86. That's one of the reasons why I thought it was very important to kind of prevent further minor capitulation. I will say, if this puts in a top, the only reason why I'd be looking for a deviation, right? It's going to put in a top on the monthly. The only reason I'd be looking for a deviation, like I just showed on the monthly here, and or, it can definitely do one of these if it wanted, right? But it's more likely going to break down, in my personal opinion, even if it comes down to like 65 as a deviation, lower low on the monthly, and then potentially go to higher highs, maybe even on a March. The only reason why I'm pointing that out is because we have not seen a full minor capitulation this cycle. We've seen capitulation, but we have not seen an actual hash crash or anything like that, like the typical post halving minor capitulation. And because we haven't seen that, and because every single time, because Bitcoin it works on technically 2 cycles, we all know about the emission cycle, which is the halving, but then there is the minor capitulation cycle that comes post halving. It's late already by 6 months by my estimation, give or take 6 months after this month closes. But we have never seen a post halving minor capitulation that did not result in new all-time highs. And I'm not talking about your hash ribbons indicators capitulations. Okay, I'm talking about true minor capitulation where they get tailwinds and large percentage adjustments down in difficulty, where even some of the older machines can turn back on and start mining. The reason why is because then they start restricting supply, hodling up, still obviously selling enough for operations and whatever their plans are for those particular operations. A lot of them can remain profitable now, especially some of the bigger miners now that they've diversified through bonds, treasury, and then of course AI. But that's not like the majority of the network. That's maybe a little more than 75%, like 75, 78%, right? Tops. That is that efficient. The most efficient mining operations are going to be off grid. And then you kind of got everything else outside of the public players. Look, we have not seen a hash crash this cycle. We've seen some capitulation from miners. We have not seen a hash crash or that big post-halving minor capitulation event. That is the only thing right now that is making me question anything outside of the technicals here. Because I'm going to be straight up with you. The technicals tell me that this is going to go into a bear market from here on the monthly. That's what this is telling me, right? But the other counterpoint to that is this is a tight compression. So even if it does go into a bear market, it's probably going to be pretty mild. And then, of course, it's not just monthly compression. It's quarterly compression. We haven't seen expansion on the quarterly here. And this would be the first time. There's a few firsts. First post, if it does put in a top and especially break structure, like, break the bull market structure on the monthly, which it hasn't done yet, right? So it's still, the door is still open for the bulls. Keep that in mind, bears. I know that everybody's incredibly bearish, but the door is still open for the bulls. Like, they can run this back the other way, even if it's just a swing the all-time high, and hit that fib level that at 128 to 130. But realistically, this will be, if we do put in a top here, this would be the first top headed into it. And when I mean top, I mean like a macro top going into a bear market period or cycle, which I do think would be shorter and milder. But it will, if it does do that, it would be the first time that we saw no post halving minor capitulation until that resulted in new highs, right? And that's what makes me question if it does break structure. I think we would get a slingshot right back to the top side and make a new all-time high. There's always the chance that it wouldn't, and if it didn't, that would be a first. There's also the first time in Bitcoin's history that on a quarterly time frame in a bull market, we didn't see Bollinger Band expansion, right? So this is a couple of firsts, but we've been doing a lot of firsts with Bitcoin, like reclaiming a prior cycle's all-time high on the monthly and quarterly, right, of the 2017 area, right, the highs. A new all-time high prior to the halving. That's new as well. So this is just all part and parcel with an evolving market, and you just got to roll with it. But I'm comfortable with my 123 to 125 call as a local top, and I'll keep the door open. But just understand from a structural point of view, everything I'm seeing is bearish. But there is a few outlier things that are keeping that door open on the bullish side for things to recover and potentially make new highs. But there's a lot of work for the bulls to do. You saw that chart. So that's going to be it for me today. You have a wonderful weekend. I hope you all had a wonderful Thanksgiving. Please like and share this out there for those that you think might find it helpful. And if you found it helpful, it does help me as well. and I appreciate you. And I appreciate all the feedback that I get from everybody. And I will talk to you again on Monday. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.